Hello everyone, welcome back to the channel. Matt with Green Bar Trading. Welcome back to another weekly watch list video where we're going to go over everything you need to know for the week ahead. Before we get into it, hit the thumbs up for the video. If you are new, consider subscribing to the channel. So as you can see here on your screen, we have the earnings for the week. So if you are interested in trading around earnings, there they are. Those are the companies, and you should see what the earnings reports say and those conference calls that happen after the earnings come out, because a lot of times we can see moves go in opposite directions based on what the CEOs have to say about the guidance. It's always about the guidance. All right. So there's those right there for you guys. Okay, jumping over onto the economic calendar. So what we're going to do is we're going to look back at last week and what we saw last week first. So last week we had a lot of hot inflation numbers. You had the CPI that was hotter than expected. You had retail sales that were hotter than expected. You had initial jobless claims still under what is projected. Less people filing for unemployment. You had PPI at a huge beat here. Inflation is still high, right? The consumer is still in relatively great shape based on these retail sales from January. So, after we saw a lot of this, the bond market started to finally trade with the overall economic outlook, with that economic data, something that hasn't happened all year. The bond market has been not believing the Fed, so bond yields have gone down, and it's been ignoring the hot economic data that's been coming out. That started to change this week. We started to see the bond yields go on up and the equity market pulling on back a little bit. All right, so it finally started to trade in tandem with what the Fed has been saying and what the economic numbers have been showing. So if that continues to happen, we most likely will start to see more of a sell-off in the overall market. But we just have to wait and see, obviously. Nobody's got a crystal ball. This week, Monday, the markets are closed. That's for President's Day. And then on Wednesday, something that I'm interested in is the FOMC minutes from their meeting February 1st. That is going to be pretty interesting to me because there was a lot of questions that Powell simply would not answer in that press conference. And he even said, wait until the minutes come out. So that can move markets. You have GDP on Thursday. That can move markets. And then PCE on Friday. That is the Fed's number one inflation gauge. So that will definitely move markets there, depending on the numbers. And, we just have to wait and see how they come out. So that's the economic calendar for the week. The bonds, what I wanted to show you guys, like I had said, the bond yields started to move. All right. Look at this, those short dated bonds with yields that are higher than the longer dated bonds. That is a curve inversion. It's a very big curve inversion. Most of the time, this shows a recession is coming. Now, it could be a year from now, but almost always when the yield curve gets this inverted, we have seen a recession coming. So I'm just going to show you guys. This is the 10-year and the 2-year Treasury yield spread. It's currently at negative 0.78%. The average, long-term average, right down here, is 0.91%. So almost a full percent separates the 10 and the 2-year normally. This one is inverted, meaning that the 2-year is yielding way more than the 10-year. So just keep that in mind. That's very, very interesting stuff there. And like I said, it's always predicted a recession coming. All right, so jumping over to the compass, the SPY. This is the daily chart. This is what we're looking at right now. The 200 moving average is this orange line. The 50 is this white line here. And the 20 EMA is this blue line right here. The 20 EMA is more of a momentum indicator. So when we see really nice momentum, it will normally bounce along that 20 EMA. On the 1 minute charts, I use the 9 EMA for momentum. So that's a strong indication when this is trading, when this 20 EMA is over both the 50 and the 200, that means that we've seen a very big move. And we have seen a very big move. Right here, this crossover right here, that's called a golden cross. That's when the 50 comes back over that 200. Because the 50 should always be over the 200 moving average. During last year, it wasn't. We had that death cross right up here. And now we're finally starting to stabilize a little bit. So where do I see the market going? If we break this 404, which has been support, then the next area would be this point of control here, this volume ledge, and the 50 moving average. So that's what I have here on the daily chart for the SPY. On the Qs, this is what I have here. The volume point of control is right down by that 50 moving average. If we do see further weakness, every time the market has come down here, and I'll show you guys on the 30-minute chart, which shows this way better. But every time we've come down to this 298, we seem to pop up. You can see that these candles here, it's bouncing off the bottom. On Friday, we saw a very nice, trade off of those lows that we saw. And it rallied into the close. So that was a strong sign, but that doesn't mean we're out of the woods yet. It did bounce off that 20 EMA, which is the momentum. It's in a very big uptrend right now. So, thinking that it's going to pull back is only normal here. That's a normal pullback, and it's still in that range. Barely holding on to the range, but it's still in there. All right, now looking at this on the 30-minute chart. Now, I had pre-marked this up already, but you guys can see this trend line from the beginning of the year on the Qs, it was used as support the whole way up. Once it breaks that, then it's resistance. You see here how it's resistance these two times, and then it sells back down. Now, this is the support level at 298. It was resistance here back on the 27th, and then it was support, and then support again on Friday. So if this breaks, then you can see possibly downside, like I said, to that 50-day moving average. The SPY on the 30-minute chart was in an uptrend as well, and now has seemed to showing those lower highs, but still support here at this 404 level. All right, looking back on the daily chart at this, there's a couple of trend lines. Now, one trend line is here, very clear trend line. And then the other trend line was right here. And now that trend line broke. That broke on Friday. We're still in an uptrend for, since October lows until this trend line breaks. That's a far way down. So just be aware that the SPY got a little ahead of itself, but it is showing a lot of strength. But if we start to break and get lower lows, then you can assume that this trend line is going to be tested at some time. All right, so that's the SPY. Looking at the Dow Jones, more of a boring picture on this. I mean, it's just been treading water all year. So that's the Dow, nothing much to show there. The IWM has shown a lot of strength. Now, this had a huge move. It pulled on back to that breakout, right? It was resistance, turned support, and then it broke out again. So the Russell 2K is showing definitely a lot of relative strength and holding up very nicely. So that's the IWM there. And I'm not gonna do any, stock picks or anything for the week. I think we need to wait to see where direction is going to go. And I think there's going to be more opportunities to trade the SPY and the Qs in the next couple of weeks, because I think we're going to see a trend develop. And if we do break to the downside, there's going to be plenty of opportunity, for puts on the Qs. The Qs have been up a lot on the SPY, and we can just take it from there. The VIX is back to that, that level here at 20. It broke out and then it came back down to 20. So I don't know what's going on with the VIX, but the VIX is definitely showing a lack of fear in the market, at least right now. I'm waiting to see that next push up, which is what we have seen before in the past. And I'm waiting for that to push on up. If the VIX does run up, then you're going to see the market most likely pulling on back. All right. So that's the VIX over the last 3 years. It's been very tame this year. So I think something is about to make this one move. And like I said, if it does, you will see the markets pull back. All right, guys, I hope you enjoyed the quick weekly watch list video. Hit the thumbs up, and I'll see you on the next one. Take care, guys.